There's several types of allowances that we would manage for people, or at least take them into account when we're devising a strategy for them. The first allowance is the personal allowance. Now everyone gets them. They change every year, hopefully, based on governments. They will increase, but you never know. And what we would always do is take into account what your sources of income are. That might be PAYE income through employment, it might be pension income, it might be state pension income. What we have the ability to do with different types of investments is shape the investment around your personal allowance. We find we're working with people on £30,000 a year who are not paying tax, because we're able to slice and dice different elements of the portfolio to get them the net return without paying tax. We're not saying don't pay tax. What we're saying is you might not want to pay, and if you don't want to pay it, then there's ways we can work it. So the personal allowance we just touched on, everyone gets one. There's other benefits I would throw into that. We address these in our reviews a lot to give people more money. Your personal allowance, as I said, they will vary every year. So I can tell you what it is today, but you know, post-April it will be different. There's little things you can add on to that though, like the marriage allowance. So for example, if you're a basic rate taxpayer and your partner, civil partner, spouse, is a nil rate taxpayer, you can take up to 10% of their personal allowance and add it onto yours. So essentially what we're saying is they're not using their full allowance, you're over your allowance, so you can take a proportion of their personal allowance and add it onto yours. So it actually saves you tax every year as well. So inheritance tax, it's quite a complex issue. A lot of people get caught up on what they think they know on inheritance tax. So I think for the purpose of what we're doing here today, I think my caveat is it's relevant to individual circumstances, i.e. if you've given previous gifts. The first thing I would say on inheritance tax is use the allowances available. You can gift £3,000 certainly to children, and you can go back a year as well, so it's 6,000. What you can also do is you can gift unlimited amounts out of disposable income. So I'll give you an example. Say your household income's £5,000, your bills are 2.5, and you've got £2.5 disposable. As long as you're gifting that regularly and you do that every single month, I'm not saying you would, but you could, there is no tax liability on that money when you give it away because it's out of disposable income. I don't think that's well known or not known enough. So I think you know, if you have a lot of cash and it's excess income, that's what you could use. The key points in inheritance tax is you have a nil rate band each, which is £325,000. And that would be an individual one if you're single, and it's a joint one if you're married or civil partner. So that gives you £650,000. If your assets are below that, there is no inheritance tax liability. If your assets are above that, then we start to go into the realms of a 40% tax liability, importantly only in the excess above the 650. Now, the government a few years back brought in the residential nil rate band. They're pretty much acknowledging that in Edinburgh, where we are, it's not difficult to be over £650,000 on a property. So the residential nil rate band had meant that they will look at each nil rate band at 325, and they've taken that up to £500,000 relevant to your property value. Because if your property value is 100 grand, they're not going to give you another £175,000 allowance, because that doesn't make sense. But in theory, if you've got a high property value, £600,000-700,000, you could benefit from an unmarried couple up to £1 million inheritance tax limit. So the excess would be above £1 million as opposed to 650 relevant to the property price. Now there are rules attached to that, i.e. it has to be passed to a direct descendant, which would be your child, grandchild. So if you don't have that, then the residential nil rate band is not as relevant to you. But I think it's important to know what that is.